Hey everybody, welcome back. What a wild day. We're going to get into all of it. PPI and CPI, what is a super user, why NVIDIA is moving the way that it is, some of the rallies and why we were able to spot this a little bit sooner. We're going to just jump right into it. So to start with, let's get into the NQ, so NASDAQ. And I do want to spend a lot of time on the S&P as well. But I just want to walk through basics of what we tend to do here and how this can actually help you and how you can find value in this. So we have this 830 bar. And you see that line right there? Now let me drop this down to a 1 minute chart. This is where it gets super interesting for us. So here's that 830 bar when PPI came out. We're going to go through PPI. Just spoiler alert for those that are going to watch the video. It was better than expected, and that bodes well for the market. We'll explain why. And if you watched yesterday's video, you already know why. But I want to get into it. But let's just look at this first. So we always mark off that first bar, that 830, and we never really got down here. No point in marking it off. But you see this little yellow bar right here that's coming straight across? And if we go to it, we'll see a little point right here. Well, that's the 830, and that is what? That is the 830 CPI number from the previous day before. Look at how you bounced right off of this. So one of the things I talk about a lot, and one of the things that I can provide a lot of value from, is how you should be looking at levels. If you look at the previous day, especially around economic data, that is a level that was set by an algorithm. Okay, so that is high frequency traders and algos that are trading those levels. If you mark them off and you just kind of leave them there for a day or two, sometimes you note this stuff. And here we are noting that stuff. So what did we do? Around 10:30, we came back, we retested a what? A support level. You could see how it was what? Resistance. Boom, comes back, resistance becomes support. I won't say what again. The 50% demarcation line is perfect versus a fib for times like this. Why? Because you have that CPI number that comes out. What you do is you overlay a 50% drop. You can do it on TradingView. I'll show you a really quick tip on how to get to that 50% line. All you do is come right in here and you use the retracement. You take the retracement and you just drop that retracement straight down from that level. Let me get to that 1 minute bar, and there you are. Bonk, and it's right in there. Give me 1 second, and you can say that's as close as I'm going to get to exact. But you get where I'm going with it. And all you're doing in here, if you go to settings, you just take this off. So instead of having all the fibs in, right, all you're doing is you're taking the fibs out, okay? And all you're doing with that is just overlaying and putting a 50% line. Now, why do you want a 50% line? And I don't care if you use the fibs. I do use fibs, but not for this, because that tells you who's in control. So when you broke that 50 and you were unable to get over it all day, sellers were in control all day. How about today? What happened? Well, we rip off the open. Around 9:12, they attempt it, fails, comes back. Let's get rid of one of these. Pulls, retests, goes, and then it flips. What time did it flip? Around 1 o'clock. Anybody know what happened at 1 o'clock today? 30-year bond auction. I'm just going to get this out of the way right now. If you are looking at technical analysis and you are not looking at macro data or any of the fundamentals or any of the bond auctions, you are missing huge edge. Everybody that was on this call this morning when we did the pre-market live, which is public and free, everybody knew that this PPI number was good. Every single person. We were very clear about it. And we talked about how this could actually rally the market. And that's exactly what happened. And that's exactly what we were doing, even pre-market live in the public call. We were going long. It was very easy to see why this was going to happen. So remember, PPI is a leading indicator to CPI. We'll dive into this in a little bit, but I really want to hammer this home. If you mark these levels off, no, it's not a secret. No, it's not a hack. Okay, it's just the way that it is. Think about it. If you have a 50% line, it just makes sense. If you get over that bar, that means you have less what? Sellers and more what? Buyers. It's not rocket science, guys. Don't overcomplicate it. You can see how you tested, and then boom, lifted. 1 o'clock. So there's an index I'm going to bring up, but we're going to spend a lot of time on it on Saturday. It's called the Smart Money Index, and it's different than Smart Money, Dumb Money, but you need to watch this and you need to see how this is acting. It's really important to note this today, and I want to just show you a huge distinctive difference. But let's get into the ES. Now, there's another indicator that we talked about a lot. It is something that I use. It's not proprietary, but it's certainly something that I use a lot. I'm going to show you how to do it, and you saw it yesterday as well. But again, here we are. Here's the 1 minute what? Bar. From when? The ES. From CPI yesterday. Bonk, 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 right? All in here. Rejection. We went over this, okay? What happened this morning? 9:12 tries, complete Matumbo. Then what's it do? It's trying to get over this. Look what was struggling today. The ES was struggling today. Was the NASDAQ struggling today? No. What's the stronger market right now? The NASDAQ. How can you tell? Glad you asked. So if we take a look at the ES and we look at this chart, I'm going to clean up all my nonsense. I can add value here. How? I can do the simplest of moving averages, and I can show you how we hit the 55. And here's the 12 and the 22, and it's there. So you could say that you still have an issue because the 12, the 22, and the 55. Now, that's what I use. You should use what you're comfortable with. These are my demarcation lines. If it's not over the 12, I don't want to swing trade, whether that's the index or the stock. If you're not over the 22, who's in charge? Bulls or bears are in charge? Bulls are in charge over the 22 for me. Bears are in charge under the 22 for me. Institutional support, 55. Above, I have institutional support. Below, I don't have institutional support. And the 200 to me is the last bastion, period. Okay, so this is where we're at, and that would tell you how I view this. Then if I just do something as simplistic as look at NQ, I'm going to get rid of all my nonsense, and I go, we held the 55, we're above the 22, and we're above the 12. What's the stronger index? But wait, there's more. At least I made myself laugh. I was just thinking of that guy who used to slap. Where do you have that glue? And he would slap it and he would stop all the leaks. And he would always say, wait, there's more. Anyway, so you see QQQ, SPY. Okay, now what we're going to do is we're going to click on this line. We're going to go to a bear chart, and then you're going to see the line. You're going to be like, okay, great. You drew a line and a relative line at that. Go to the hourly. You know, we talked about this. We've been talking about this since Saturday, right? And what we've noted is that they are buying the NASDAQ. Now, did we know that this was going to happen? No. Do you know why? Because nobody knows what's going to happen. And that's not your job. Your job is not to predict, okay? That's not what you do here. What you do is you analyze data and you look for signs to see if you're right or wrong. Now, we note that this was a level before that we held where the relative strength of the NASDAQ would catch and then outperform the SPY, where the relative strength of the NASDAQ would catch and then outperform the SPY. 1, 2, 3, 4, 5, 6, 7, 8, 9. Get it? All right. So it doesn't always work that way. You need to understand, again, yeah, I'm going to keep bringing it out in this video, the stool. Now, what was going to happen today to technicals if PPI came in hot? NASDAQ would have cratered, right? The NASDAQ probably would have cratered. If you got a super hot PPI, you probably would have cratered today. What saved you were the bond auctions, which we know to watch. The speeches from yesterday and today saved you. And also the technicals then kicked in, and people are going to look at technical charts today. And here's the rub. The people that are going to look at technical charts, they're going to pull up names like AMAT, right? And they're going to look at these names. I'm going to go through a tangent for a moment. I really want you to get this because this is how you outperform. They're going to look at names like AMAT and go, oh, you see how it's acting right in here? Okay. If you understood macro and you just had the basic understanding of it, you don't have to be an economist, but just the basic understanding of how it's all connected, you're not buying AMAT there. You're buying it off the open. You're not buying NVDA. And I have a really good live trade. I'm going to show people how we did it. Not only yesterday's live trade, but we went long again, NVIDIA here and SMCI. And I want to show how we were able to stay in it because of your comments. One of your comments, and it's been apparent, how do you stay in trades? We're going to go through it on Saturday in some detail. So you're going to want to watch Saturday's video. I already have it mapped out in my head. But you would have known that off the open, you had an interest. Okay? Off the open, you would have known that you had an interest. So when you saw these levels, and you already had them marked off from yesterday, right? Because you already knew these levels from yesterday. So we already had them marked off. And I'll show you what I mean by that. You'll say, well, how do you have them marked off? Well, here's the high of 74. So you always have the high of the previous day marked off, right? I'm sure you already know to do that. Retest, or we could say test. Then we could say retest, right? And look how it held. Okay. So this, let's say you missed this, gave you another chance, comes up, gave you another chance, and then it ripped. And then when did it get stronger? Right around when? 1 o'clock. And then it just took off from there. It got stronger at both bond auctions today, didn't it? Right? You have that 11:30 bond auction, and then it just solidified around 1, and then it just kept pushing, and it's actually up after hours. Disclosure, I still have a position in this and calls in it. But Saturday's trade I'll walk through because there's a ton of data I really want to go through so that you're prepared for tomorrow. All right, so now we understand where we're at, and we understand what's going on with NVIDIA, and we understand these moves, and we understand how you could catch them. Let's look at the most basic of indicators. So you have a 55 here, a 12 and a 22. That's what I use. You should use what you're comfortable with. Note the close. So Who's in charge of that stock right now? Bulls are in charge. Is it something that you could swing trade? Yes, you could swing trade it now because you're now above the 12, right? See how it's all connected? Now, if I go into one of my other charts, this is another one that I use a lot. And this is just a 3, a 5, and an 8 on a 15. And I apologize that that is not easy to see. What are you starting to see? The 3's pointing up, the 5's pointing up, and the 8's pointing up. Why are they buying this name right now? And why are you getting an upgrade today with an $1,100 target price? And I'm going to show you why. So you're going to start seeing how this stuff's connected. ASML has earnings next week. Okay. 17th, look at what the stock's doing. All right, look at how the stock is moving. Okay, this was a monster move in the beginning of a massive 2-year upcycle. They're not my words, they're the words of analysts. So take it with a grain of salt, but that's how people are looking at it. Taiwan Semi, we already know, is setting up and has earnings next week. Who's the biggest beneficiary of those two companies? I'll say it. Say it with me, NVIDIA. So now we're going to see how this acts, but that is a clear crystal breakdown. But let's get into exactly what happened here and what the heck a super user is. First and foremost, PPI came out today, and we're going to go through this, and we're going to just have a quick talk about it. So we are all in this. Month over month, PPI. PPI, Producers Price Index. For those that are new, welcome. PPI means Producers Price Index. The producer of the good that sells. What do we pay? Core. You like a burrito? They need beans. To buy those beans, that's the PPI price. The burrito that you buy from Chipotle, that is what? CPI. You pay rent, they don't pay rent. They have janitorial services or medical care services that they have to pay, right? That's PPI. So if you think about it that way, they need the goods and services in order to sell you goods and services. So PPI, if you think about it that way, PPI is a leading indicator to CPI. All right, so just think about it that way. All right, so why is that important to note? Because previously we blew this out of the water last month. Last month, this number came in significantly hotter than anticipated across the board on every single metric. It was not supposed to come in this hot, and it did. And when it did, it scared the market. Now, this time, PPI month over month, consensus was 0.3, you came in at 0.2. Consensus of 0.2, core's coming in at 0.2. Year over year, consensus was 2.3, you came in 2.4. They were looking for this to absolutely blow out of the water, and it really did not do that. Now, you look at year over year, 2.2, it came in at 2.1, 1.6. So while people are saying, oh, well, it's still higher, now it actually came in lower than anticipated and much lower than the CPI just was, which means that prices are actually dropping. And we're not recognizing that. And I think that we didn't see that in the CPI, which means this is why we're seeing the data have the response to the market that we're seeing the way that we are. And where they're going is they're moving themselves out of one sector into another. But we're going to get to that. And we're going to talk about the great setup of the week. We've all known that this leaked or that leaked. We've all said it before 1,000 times, right? That they talk about these numbers, and we know that they have people on the street that talk to one another. You know, they used to talk about people that were at the Bureau of Labor Statistics or in the organization that all came from Goldman Sachs, and they used to call it government Sachs at one point. They probably still do. But what came apparently clear, and this is an article from Bloomberg, JP Morgan, BlackRock, among Bureau of Labor Statistics economists, CPI super user. Well, what's a super user? Well, I can tell you what it is. It's not me. Records request shows correspondence about inflation details. Economists sent emails to select group about rent and used cars. So when you think that they have access to the data before you and you say, quote, it leaked, it didn't leak. They're just a super user. Okay? Economists have been clamoring to find out more about these super users. I mean, wouldn't everybody want to be a super user? After the Bureau of Labor Statistics staffer addressed an email to those people in February, which means that this has been going on for some time. An economist from the BLS correspondence data related to key inflation gauge with major Wall Street firms like JP Morgan and BlackRock, raising questions about equitable access to economic information. BLS economists answered numerous inquiries about details within the CPI in recent months, mostly related to computations of key categories within shelter as well as used cars. And the back and forth between the financial firms, the back and forth between the financial firms and the economists who have been with the BLS for many years was first reported by the New York Times. He sent several emails to a broader group, which he called my super users, in one of the emails obtained by Bloomberg. The BLS says it doesn't maintain a list of super users. Someone should tell The Economist that. In mid-February, one user says they could be added to the super user list, which apparently doesn't exist. To which the BLS Economist replied, yes, I can add you to the list. You can't make this up. You literally cannot make this up. While the recipients were redacted from the request, email signature details disclosure employees were visible some of the provided records. Okay, get it? All right. In addition to BlackRock and JP Morgan, other banks and hedge funds and research firms, Brevan Howard, Millennial, Citadel, Moore, High Frequency, Nomura, BNP, appeared to exchanges and declined to comment. Farrow Management, Wolf Research also came up in the emails but did not provide comment. Economists have been clamoring to find out more about these super users after the BLS staffer addressed in an email. All right, we're trying to clear the air and end the confusion. Okay, it's a mistake. So here's the problem with this. The latest revelation is to prompt a deeper look at the dissemination of economic information. All right. One case of these shared information that was not publicly available at the time. Right. This is an embarrassment. It's an embarrassment because they got caught. All right. So when you think that they have access to the information before us, of course, it's under review, just like insider trading is under review for Congress. So what does all this mean? It means that they have access to the information before we do, right? Okay. So what this means is that when we think that there's a move that's happening, it probably is, right? And what can we do with this information? Well, we can, now that we see it, when you start to, you can't really unsee it, right? So let's get to it. So this is pretty interesting because if you take a look at the ES on a 5-minute chart and you mark the low from here, and then you realize that around 840, they just stopped selling the S&P. If they knew CPI, did they know PPI? I mean, you'd have to be a fool to think that, oh no, we just knew this one thing and we only did it once. Like, you'd have to be a fool to think that, right? So clearly what they knew here was that they wanted to stay long. And then what they did when the data hit, they were already long. Hence the reason why you didn't have any supply. Okay. And this is exactly what we're seeing. Then you come back down when? For the first hour of trading. And we're going to talk about the first half hour of trading and why it's so important and why the last hour of trading is more important. But understand that this is going on and this was played like a fiddle yesterday. And it should make you angry. Okay. It should make you really angry, because it's very clear what happened here. It doesn't really get much clearer, does it? It was the first 10 minutes of selling down, and then it stopped, and then you have the bounce. And it's very clear that they knew what this was. It's very clear that they acted on this information. So I think that there's a real problem there. Of course, nothing will be done about it, but at least now it's becoming more to light. And I think that if we're aware of it, we can know how to act on it. And I would continue to mark these levels. But now we know more than ever why these levels work, right? And this is the previous day on the NQ. Now we know more why these work. And of course, overlaying this when we're starting to look at should we be in the NASDAQ or be in the ES, it's pretty clear that we want to be in the NASDAQ versus being in the S&P. So let's take a look at this. Now, this is a site that I use, and this is Smart Money Index, and this is different than Smart Money, Dumb Money. And this is Sentiment Trader. This is not mine. I'm going to spend a little more time getting into this weekend, but I want to just give you an example of something right here. And you can see November on, and you can just see how we were moving, right? Okay. So what I want to do first is explain what you're looking at and why you should care. I think that's the best way to start with this. What you're looking at and why you should care about it. So what we're going to do is come down here and show you the information. So it's a medium time frame. It's updated daily, and this is the source of the information. The idea behind this indicator, popularized by Don Hayes, existing with many variations, is that emotional trading takes place at the beginning of the trading day. We talk about this all the time. It is retail, right? Retail trades the beginning, not institutions, right? The beginning of the trading day, as traders react to overnight news, economic events, while, quote, smart money takes the day to evaluate, let's get rid of that yellow, takes the day to evaluate price action, import their orders before the market closes, right? We always talk about the last portion of the day is when institutions move, and who moves in the beginning of the day? Retail, right? Okay. That's why they tend to take it up after the first half hour, and then you'll see it come back down. They feed it to retail, and then either it comes back down, they get retail to panic, and then they can buy like they did today, or they just keep selling into retail, whatever they want to do. For example, let's say smart money, well, here, this calculated out. Due to the assumed tendency, we want to bet against the opening action and bet with the closing action. We want to bet against the opening action and bet with the closing action. One of my best indicators that I use, and it hasn't happened in some time, is 4 closes in a row on a Friday that are down. So if the NASDAQ or S&P is ever down like 4 closes in a row on a Friday, that means that they're getting out of equities. It's actually very bearish. We haven't seen it for some time. The way that we calculate the index is to subtract performance of the cash index during the first half hour of trading and add the performance during the last hour of trading. So they take out the first half hour and they add the performance in the last hour. For example, let's say smart money closed yesterday at 800. During the first half hour of the day, we gained a total of 5 points. When we then ignore what happens to the last hour, now suppose during that final hour, the S&P lost 8 points. We get smart money reading. We take yesterday's 800. We subtract the opening gain or loss, 5 points, and we add the last hour minus 8 points. So today would be 8 minus 5 minus 8, 787. So SMI today would be 787. Unlike most of your indicators, there's no hard, fast rule. There's no absolute. Instead, we look at the action. When it's rising rapidly during a decline, that means smart money is buying. And when we should expect a bottom soon. Conversely, rapidly falling SMI in an uptrend would tell you that smart money is selling. All right. So then when we go and take a look at this, what are we going to note about what we're seeing here? And this is where I think. So if we come to this level, we'll note that that's really the bottom of the market, isn't it? Note the action in here. So let's flip this down to a 1-year chart, see if we notice anything, because I think that you should notice a couple things, but let's just see. So if we go right here and you start seeing how we're leveling off right in here, right around March, and then you leveled off in March, and then you start to pick up again, right? You see the difference in the trajectory, how this was following, and then it started going sideways and it still went up a little bit, right? So they're telling you that there's a reason for that, right? And that's not something that you want to look at. So let's do it this way. Let's go and let's start with 6 months. And so we can kind of really get in here. See if we can see it this way first. So what you're going to see from this period of time is you're going to see that you went stagnant when the market went up, right? Stagnant when the market went up. Well, now what are you doing? Let's go take a look at this year to date so that you can see it. What are we doing right now? We're going flat, and what are they doing? They're going up, right? So this is really important for us to get. Let me put this down here for a minute. We're going up, market's going stagnant, except for today, right? That's what we refer to as a divergence, and that is something we want to pay attention to. This is completely in line, right? You can see this. It's completely in line. And you can see how you're stair-stepping here, and then you're stair-stepping here over and over again, right? Till you go flat, and then you're here, right? And then you kind of mellow out a little bit, and then you get the hockey stick, and you're still flat. So this is telling you that you're setting up, or that smart money and institutions are buying versus what retail is doing. And we're going to get into smart money, dumb money, but I want you to be armed with this for tomorrow. Now, tomorrow is going to be a very interesting day because people are going to expect weakness into what? Well, they're going to expect weakness into the weekend because of Iran, who just happened to issue a statement where they basically came out and said, well, we don't really know what we're going to do, but which is kind of really funny to issue a statement like that. But I'm not really sure why they're issuing their statements the way that they are. But I want to talk about a couple names. First and foremost, Amazon hitting all-time highs, and that's not a small trade. That is an all-time high. So Amazon's hitting all-time highs. If we take a look at SMCI, I think this is pretty telling, but let's just talk about it, how we're sitting right at this level. And if we put the simplest of indicators in, we can see how we came right to that 55 today and then flipped. This provided a really good trade for us today. Very simple trade to put on. And then overall, if you're just looking at the market and you're looking at NVDA, which we covered, yeah, of course, you're going to bounce around until tomorrow morning, but who knows what retail does overnight. But to me, I think that this looks really good, and I would fully expect this to have some legs going into next week. Now, maybe it's not tomorrow, but it's certainly out there now. It's going to be hard to just see if that rejects in here with the way that we move today. It might not be the worst idea to just come here and take a look at the volume. And it's not the greatest volume, but you know what it is? It's solid green buying. And if you were to do the simplest of things and just drop a line straight across on that volume and then lift up, you can see that it is certainly more buying than you've had before CPI and PPI, right? And that's certainly something that we want to pay attention to. Now, it didn't have the great volume that you had here, but maybe that's an exhaustive sell. That's very possible. So this is certainly something that we're going to keep an eye on. And one other thing that I think is really important is another divergence we're saying. But before we even get into that, it's not like you're not seeing the energy names continue. I want to get that out before I show you what I think we should pay attention to. It's not that you're not seeing energy continue. It's that other sectors are leading. And let me give you an example of this. If you are to come here and you're to look at XLK, for example, and we're going to turn this into line form, and then see how much it's more important to understand all this macro stuff instead of me just pointing at technicals right now. Hopefully you're getting why we're doing this. Right? Now watch this with XLA. Because if you're just looking at technicals, you're missing so much of this right now. Now let's go drop to a 5-minute chart and let's go to the 10th. Okay, so let's go to the 10th and when the market opened. All right. Now, If someone told you that tech has been outperforming since CPI release, you would have told them there's no way. But tech is outperforming since the CPI release, XLK versus XLA, since that date. If you come here and you take a look at the 11th, it's way, way stronger. Now, if you take a look at XLK and you divide that by XLE and we overlay this into a daily chart, and let's get rid of energy for a second so that people understand where I'm going with this. Now, you can see the double top up here, right, with XLK. So maybe that's something we want to pay attention to, but let's drop this into an L and pull this back. And what you're going to note is that you've undercut here, right? And now you've made a higher high. Well, you have not really made a higher high that has sustained for some period of time here. So the question is this going to sustain or not? We don't have the answer just yet, but if you start looking at this downward slope, we're starting to see some signs that, yep, we could have broken that DTL. And DTL obviously is downward trend line, right? We can all see that, and we can all see that break. So what does that mean? Well, that means tech is going to outperform energy, or is setting up to outperform energy. Now, does that mean that energy is not going to rally? No, it just means that tech is going to outperform it. So you can outperform and you both can still drop, right? As long as XLK drops less than XLE, XLK would still outperform. So what we're looking at is a relative basis. This is relative. This is not absolute. So Apple and Microsoft could go up double digits and Exxon could go up single digits, to give you an example. But what you're looking for is a change in trend based upon what? Macro, fundamental, and technical analysis. And then once you do that, like here, like the stool, and you overlay all of this together, you have significantly more edge in the market than the majority of people you're trading against. Believe me, nothing is becoming clearer to me than what I'm starting to see with some of the stuff that's posted. So if I take a look at something like this, these are the cues. And here we are on just an hourly chart. Now, if I take a look at something like this, you're going to get a couple DTLs, right? You're not just going to get one downward trend line. So you have a major, that obviously because that's the peak, and then you have your minor one right here. And you can see that you've broken your minor one already. I'm sure we all can see that, and we can expand this up so that you can see that very clearly. And then you would want to see if they made a higher high, which they have, which negates this DTL and means that you're setting up to try to get up to here, right? That's your target. But before then, we have to contend with this DTL.